Hello traders, welcome to your daily market update for Wednesday, the 3rd of June 2015. Overnight we've seen a lot of price action. Volatility spiked. We've seen the euro go through a phenomenal short squeeze. The euro versus the US jumped 2%. And what brought that on was a combination of things. The Eurozone CPI jumped to 0.3%. We had weaker than expected factory orders from the US, so we had a little bit of weakness in the US. And there was some progress in a Greek deal. We're not there yet, but there has been some progress. So overall, that created a situation where we had a divergence in US and German bonds. So we had the German bonds yield rise quite rapidly and the euro became quite in favour. We had a massive short squeeze of the euro dollar, and I'll talk about that when we get to the charts as the price started to push through $1.10. And it was a very impressive move, and we'll have a look at that in a minute. We have a lot of data coming up tonight, and you can see here from the euro, we do have PMI market services, we have retail sales, we have the unemployment rate out of euro, we have the European interest rate decision, although that is expected to be left on hold. We have the ECB press conference, and that will definitely be in play after what has been going on the last few days. It doesn't stop there. We have some US data as well to keep an eye on. We have ADP non-farm employment. That's giving us an indication for Friday's non-farm payroll. We have trade balance as well. And then later on in the session, we have some ISM manufacturing and services PMI as well. So there's a lot to cover on today's session. It's going to be quite active. And from the volatility, we've already seen the euro already left the gates. And it has been underway. The Australian dollar continues to stage this impressive rally after the RBA minutes, and we're seeing here that the GDP also impressed today, which is continuing to push the Australian dollar higher. Let's have a quick look here, and I'll go to a daily chart here on the US dollar index. And as you can see, the sell-off was quite heavy here yesterday. And how far low it's got to go is yet to be determined. I think we do have some support that we need to consider. We have some support through here, and we have some support at the current levels as well. We need to keep an eye on both of those. Let me leave the support level here for now. I'll go into a shorter time frame. We'll have a look at the 1 hourly, and I'll zoom out for you. And you can see that the movements that we've had here has been an A, B, C, and extension for D. We've stalled, created somewhat of a double top for the time being. We broke out through the new lows, and the breakdown has continued to sell off. Now are we looking for a C, being A, B, and a C? If so, the pullback, there is some support at the current levels found from historical highs over here and over here. And if we do get some support there, well, then we may be able to hold and continue the bullish momentum. However, if the US dollar data continues to unimpress and the euro situation looks like improving, I think that we could see a sell down to this level. A breakdown of 95 could definitely open up moves to the downside. We're going to have to be poised, but as you can see, the volatility and the price action was quite severe. And momentum is definitely on the bearish side for the US dollar. As you can see on the New Zealand dollar daily chart, we have come back up and we are testing historical support levels. And if we continue to see some weakness, we could continue to see the New Zealand dollar push through these levels, and is definitely worth keeping an eye on for the shorter time frames for opportunity. The Australian dollar has had a very phenomenal bounce after what has been a very strong sell-off. And we are getting a bounce, and the next major resistance level is 78.5 cents. As you can see through here, we have had a fairly strong level of price action, be it support or resistance. And it's going to be interesting to see what the market does when it comes up and tests around that region for the Australian dollar. But for now, it definitely looks like the 75.5 cent support level is safe. The Great British Pound managed to bounce back after what has been 7 straight trading sessions of losses, and we've bounced back in phenomenal fashion with an engulfing bull candle formation on the daily. It does suggest that we want to continue to the upside. I believe that we will continue to see some higher prices, but the next major resistance level is $1.55. We'll have to keep an eye on the data coming out tonight. And we had an improved PMI print yesterday, as did we have an improved mortgage approval. So the momentum is definitely there for the the pound. So we will see how the data comes out, how the US dollar plays out, but I think there is some more upside to this in today's session. The euro, as I've said, had an amazing short squeeze. As soon as we ran up, we continued to test the 110 level, and then we pushed through it and moved another 100 pips. Momentum is definitely to the upside, as we've seen everybody short covering their orders. There's obviously a lot of stop loss orders above $1.10, and as soon as the market ran into those, you can see that we did push through quite heavily with $1.11 and $1.12. So $1.10 was, as soon as we broke through it, moved quite heavily. We could continue to see some upside. We do have a little bit of resistance at $1.12. A push through that could definitely open up moves much higher. The Great British Pound versus the the US dollar versus the Canadian found resistance, and it's having a bit of pullback, and it's pulling back and testing the lower levels of the support that we've seen throughout February, March, and April from this consolidation range, and we'll see how it holds from here. Keep an eye on the US dollar. If it continues to sell off, it may find it very hard to hold up support, but we will also need to keep an eye on oil prices as well. If they continue to rally, as we've seen in the coming weeks, well, then that could add fuel to the fire on the downside here in the short term. US dollar versus the Japanese yen has had a spectacular flame out after what has been a phenomenal rally. This does suggest we are looking for some lower prices, and we could continue after we did take out the multi-year highs and come up and tested 125. But I think downside momentum is the likely scenario in today's trading session. Keep an eye on the US dollar index, as that will be important. Well, we do have a lot of data to keep an eye on, so be aware of the economic calendar. Their volatility has increased, and make sure you stick with the trends. I'll be back again tomorrow, so until then, trade well.